Hello again. It's been a while since I made a video. Sorry about that. Been busy renovating my house and busy at work. Um, but I have been trading in the background, and that's another reason I haven't really made a new video is you have to, when you have a new system, you have to let it mature for a while before you make conclusions. So I'll give you an update on my sector ETF system where I'm using this price slope concept to kind of time exits and entries. So to give you a quick background on price slope, here's an example with XLE, so the energy sector ETF. So say that I take 20 days of past price data, make a straight line fit to those 20 days of past price data, and I plot the price slope in red. So when the slope is positive, all it's saying is that on balance, the price has been moving up over the last 20 days. Pretty simple. So if you're a trend follower, then you're following the trend. So you hope that the trend of the past will continue into the future. It's as simple as that. Here's a plot of the U.S. Treasury ETF, TLT, over about 14 months. The window length was 20 days for the prediction. This is the price slope that I'm plotting. So when the price slope is greater than zero, the pink line, it means that we're in the market. When the price slope is less than zero, then we're out of the market. I would be long TLT at this time because the price slope is above the zero line, but just barely. So it implies that the bonds are on the verge of trending downward. So yellow is the daily TLT price data for that same 14 months, and then blue is the back test curve if you trade the price slope method. It's not spectacular, but when the blue curve is flat, it means that the method is keeping you out of the market. So trading in price slope doesn't so much give you a huge edge so much as kind of keep you out of the market when the stock is going sideways or dropping steeply. So presumably the cash that you're not invested in TLT would be better employed somewhere else. So it's more a system of trying to optimally allocate. So I've got about 2 months of performance data. Here I'm plotting in blue my system versus the SPY. So currently I'm up a bit over the SPY. It's kind of interesting to see that the volatility of my portfolio appears much lower than the SPY. But that, again, you have to take a longer sample set to know if that's true or not. So here's a daily plot of my holdings. The plot is far too complicated to go over in detail. All you need to know is that you can see that my cash allocation kind of goes up and down as the trend following gets me in and out of certain ETFs. So initially, when the system took me out of most ETFs, I wasn't increasing the allocation of the remaining stocks. So I've started doing that. Essentially, I've started doubling down on the stocks that the trend following is saying are going to go up, rather than staying 70% in cash. So I've circled a couple times when I was only in several ETFs, so when I was really concentrated, so that when I really increased the allocations. So I think, yeah, this is the other dimension of trend following. You not only need to use the analysis to find the winners, you need to double down on them, commit to them. And of course, if they start dropping, then you need to sell them. That's the other side of trend following. Let your winners run and sell your losers fast. So it's interesting to plot the performance of the market over the same time period as the position sizes. So I circled a time when the SPY was chugging steadily upward, and as hoped for, the system essentially had me into essentially every asset. And literally, I think there are 15 things that I invest in. There's 11 sector ETFs and like bonds, gold, things like that. So the system essentially had me into every asset, which kind of made sense. So now I've highlighted a couple periods where the system had me out of most of the sectors, and these are the periods where the system is supposed to be making a difference. It's easy to just buy and hold the SPY, buy and hold all sectors. It's harder to concentrate on a few of them. So the results are mixed, especially if you look at the first period that I circled, the bigger one. I was doing a lot better. I was really outperforming the SPY at first, but I was mainly in cash at that time. So late in the period, I then increased my allocation into those few sectors, and right in time for them to go down. So if I would have immediately increased my allocation in those few uptrending sectors, I would have captured more upside initially and still suffered the same downside during that drawdown. So my P&L curve would have looked something like the cyan curve here. I would be up more. That's not an opinion. That's a fact. So anyway, not a real exciting video. I figured after 2 months of data, it was time to make an update. I'm cautiously optimistic that this method is giving me an edge. It's not a huge edge, but it's, you know, a small edge over a long period of time can make a big difference. Certainly over just buy and hold the SPY, which is kind of the brain dead default. So really, I need to see how this performs through a few more ups and downs, and the market that we have right now, which is basically sideways with a lot of ups and downs, a lot of volatility, should be a great time for that kind of testing. So give me another month or two, and I should know more. But I'll make another video today on my other portfolio I'm trading. But yeah, look forward to your comments.